Good afternoon, everybody. What's up? It's good to be back. Man, I was sure under the weather yesterday, like way sicker than when I had COVID or anything. I've been like consistently getting sick since the beginning of October. There's a lot of different bugs going around this time of the year. It hasn't been good. Um, I don't think it was food poisoning. I think it was actually a stomach virus that I picked up on Saturday when I was teaching a kids class at this karate school. This one kid was like kind of clearly had been sick, and I don't know. I think that's kind of where it came from. Um, those kids, those kids, they're just like plague monsters running around half the time. Um, but yeah, I was out of commission yesterday. I just could not. I could barely get out of bed. I'm never like that. I still managed to place a few trades. I can see my computer from my bed. It'd be like I was like in bed, like drifting in and out of consciousness, and every once in a while, I'd see I got filled on a bunch of orders, and I would like meander over the computer and like press a couple of buttons. Oh man, I didn't do a whole lot though. I didn't do a whole lot today either. But let's jump in. I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's my position disclosure. I am really light, guys. I'm really light. I got out of Chewy today. I'm probably down portfolio wise. I probably sold off at this point 75% of what I had long, like at the end of October there, the beginning of November. And of what I have left, I would say probably a third of it, or maybe even a little bit more than a third of it, is concentrated on that China trade between Baba and JD. Um, so yeah, I'm real light, but happy to talk about it. Dennis asking me what style of karate. Kempo, Kempo karate, and but I also teach boxing and kickboxing, or at least I did. I don't really teach regularly anymore. I kind of just fill in at the dojo once in a while when they need me. But yeah, I taught Kempo for like I don't know 20, 15 plus years or so every Saturday until basically until COVID hit, which kind of changed the world a little bit. Um, but yeah, so this market when I'm leaving from Idaho on Christmas Day, and I'm driving out. So next week I don't know exactly where I'm gonna be. Pat's out Tuesday and Wednesday. I'm driving out on Monday. I should be around during the week. I should be around during the week. Yeah, maybe we'll get a little Josh going on Tuesday. Um, I don't fully know what my plans are because they're always a little bit weather dependent. But as of right now, I'm probably going to grab an Airbnb or something in Pittsburgh for Tuesday through Friday, and then finish the drive on the long weekend. Again, kind of weather dependent on where I end up on the drive, trying to avoid getting stuck in an insane snowstorm in Wyoming like I did or anywhere like I did last year. Brian, it looks like where I'm at down in Victor, Targhee's been getting a lot of snow. Looks like my house on the cameras out there has been getting a lot of snow. Video clips I've been seeing from people look like we've been getting all the snow out west actually. Um, but yeah, I'm looking forward to it. I want all the snow to come, but I just want snow to not come while I'm driving, if that's okay. Anyway, let's talk about markets. Yeah, it looks like some of the Utah mountains have gotten hit a little bit also. I saw it look like Snowbird got a decent amount of snow. Um, all right, so spies are up 0.5%. Qs are up 0.5%. IWM is up 1.9%. That catch-up trade is really in play. I don't know if Dave S is here. Dave usually has that chart handily available on the Qs versus the IWM, where there was that, big difference between the two of them with the outperformance in the Qs. And recently we've been seeing that IWM catching up. And we had noted on his chart one day last week that kind of the downtrend was there. Thanks, Dave. That downtrend was there, broke. So it looks like the IWM, well, the IWM is very obviously playing further catch up, being up 1.9%, with the Qs only up 0.5%. This is like as bullish of rotation as you could possibly get. I mentioned it at one point when I was on the radio this morning. The type of rotation that we're getting is not like them selling off Apple and Google and Microsoft and Amazon and those names, even though Amazon was down 0.3% today. The type of rotation that we're getting is more like big cap tech is moving sideways to up, sideways to up versus everything else. These IWM names. I mean, some of these names, if you just type them up, especially some of these growth stocks, it's like the move is getting insane. And while the move is getting insane, it's still um nothing like what we've really seen. What we saw back in like 2021. This doesn't feel like a bubble to me at this point. It just feels like, maybe some of these names are getting a little bit ahead of us. Thanks, Dave. Dave just gave us the chart here in the VTF. Yep, so we got another new high there. The IWM continuing to catch up. It doesn't really feel like an insane bubble to me like what we had back in 2021. And I think Dimitri said earlier, and I don't know if he just made these numbers up off the fly or if they're actually accurate or not. I won't be surprised if they're accurate. That like using Carvana as an example, and it's up like 1,200% this year, but still down 75% from its highs. And that's kind of what I'm talking about. Like this move here and whatever, just using Carvana as an example, this move here with this stock and with a ton of these stocks recently has been really wild. Nice little breakout here in the low 40s, but just a few days later, we're at like 62 and change, or 62 or so, 61 and change. That's an insane move. But if you really remember where we truly came from, um, back when I felt things were definitively in a bubble, you can see that the high in this Carvana was $376. And when you really scroll out and look at this chart, as insane as the move has been recently for this stock and a lot of other stocks, it's like still sort of a blip in the radar compared to when this thing was up at $380. I don't think Carvana belongs at $380. I kind of don't think that Carvana will ever get to $380. Um, Though never say never. But yeah, the move seems crazy, but it doesn't feel like a real bubble to me like it did back in late 20, early 2021. With that said, we know that markets work in periods of consolidation and expansion over time. This has been an expansion period. It's been one that we've been on top of. When a lot of the times when they do start to really squeeze these more garbage-ish kind of stocks, you're getting closer to the end than the beginning, but that can potentially last for longer than you would expect. We saw that again in 2021. And it could certainly last further than where we are now. So I just think that we're in a really difficult spot. This is the point that I was trying to get across in the morning meeting. I think we're in a really difficult spot because any new buying that you're doing here it feels like chasing to me at this point, but I'm certainly not ready to come in on the short side. I'll do the smaller time frame approach that I have on the short side. If I see the spies and Qs get $10 extended away from the ADMA, but kind of talking a little bit bigger picture than that, I think that we're in an area that's very difficult to initiate new longs. But the short trade, it feels like it's too early still to me on the short trade that you could get totally squeezed out on that. It's a really tough time of the year to short. Um, Santa Claus rally, there is some truth to that. It is in the statistics. January effect in the beginning of January. The short trade just seems too early to me, but the long trade feels very difficult to me right now unless you're just doing, a small trade. The risk is tight on it, and you're trying to take advantage of a continued squeeze into the end of the year. That trade's there. It's just how aggressive do you really want to be on that long trade at this point in time? I don't really want to be involved in it at all in anything that's extended. Some of the names that I had been trading very regularly haven't even touched their ADMA on the daily chart yet this month. So it's like, what am I supposed to do with, what am I supposed to do with this S? Like I like symbol S a lot. I made really good money on this thing below $20. I've been out of it since then. And look at this. Since it had the earnings report, it has not touched the ADMA on the daily chart like a single time. Or Snap, as an example, it another example, it touched its ADMA on the daily chart for the first time since like mid to late-ish November. And that was only because it got like a nasty downgrade note this morning from one of the sell side analysts that are out there. Otherwise, it probably still went to touch the ADMA on the daily chart. And that's what I was saying. Um, in the morning meeting about this stock in particular. It's like, technically, my game plan says that I should nibble small on this into the ADMA on the daily. And honestly, because that is my game plan, I probably should have done that. Um, because I do think that you can still take advantage to some degree of the long side of this market into the end of the year. I just it's like we were saying, and I'm sure I'll butcher the Warren Buffett saying that Bill K gave me the right quotation of earlier this morning. I don't want to just be like buying Snap or S or I don't know Path to some degree, though the Path trade has worked 3 times since the earnings report. Or this BYON. I made really good money on this thing, but I've been out of it for a handful of dollars. I don't want to come in and start buying these, or I should say buying back into these and even utilizing profits that I've already made. Or Unity, here's another one. Look at this move in Unity on like a first test of the ADMA, and then if they have an actual deeper pull, which would make plenty of sense to me, kind of get caught swimming naked as the tide rolls out, as they say. So to me overall, while I still kind of intermediate picture here would rather be long than short. And I still like the idea of, I could have came in and bought this snap a little bit today and made a couple dollars on it. And I could not have justified being aggressive on it by any means, but I could have came in and bought some today. And we're just at a point here in the market where the move has been so big, so fast. I think that the move has been so big and so fast that it's exceeded the expectations of the most bullish bulls that were out there, and you could probably put me in that camp. I was extremely bullish just a month ago, a month and a half ago. I've been bullish this entire move higher. It's just we've really hit a point here where I think that the new longs are very difficult unless they're real short-term trades, they're day trades. And at the same time, the short trade here, if you're starting to put that on in the end in not quite the end of December, we're getting there. It just feels to me like that trade is still potentially too early, and you have the potential on a real parabolic move for the market, which feels like it's starting but isn't there yet, to get totally squeezed out still on the shorts. So for me, that means just trying to be patient. Um, any sort of meaningful dip in the market would probably be something that I would look to buy at this point. And I do think that the short trade is probably becoming a little bit more interesting at a certain point. It just still seems too early to me. And every time, this market can't seem to sink down. That bid just keeps coming back in and coming back in. So again, broadly, that just means I'm gonna be a little bit more hands off, and I'm fine doing that. I'm fine just taking some trades here or there, and something that seems like it might be in play on that day. And we still had a bunch of great trades today on in play names, right? Talked about this ENPH for a long because that had news on layoff. Talked about Nova for a long. versus 14 because that was in play on an upgrade. We talked about Sunrun for momentum continuation. It looks like that worked out well. So, an in-play name that's got some news or whatever. I traded this C-Gen today, and I ended up just kind of being break even-ish on it, and that was because of a really weird event with the halt here on my stop loss. That's never happened to me before. My stop loss is at $2.01, and they halted it at that price with that being the inside bid. But because that was the inside bid, it wouldn't allow my stop loss to trigger because I couldn't actually hit that bid. So then I had to sell it below that after it got unhalted, which cost me an extra 7 cents or whatever on it, which caused me to give back a little bit more than I wanted to give back on my size on this. But this is what I'm trading right now. I'm trading the C-Gen. Like I don't know what's going on. It was just there was a pre-market 5 minute pattern wedge, and I thought there could be a momentum trade above $2.11. You can see what was that wedge? Yeah, this high. This high right here was $2.11. You can see this wedge building out, lower highs and higher lows in the pre-market 5 minute. So I was like, if they break out this pre-market wedge off the open, maybe they squeeze it. Sometimes with these low floaters recently, especially because the market's been so insane, who knows? Maybe this thing goes to $5 today. Maybe this thing just immediately fails. But that's the trades I'm putting on right now. I don't love this type of trading. I've never been a fan, and honestly, I've never done very well. I'll make a few bucks, I'll lose a few bucks, but I've never done very well trading those names that are up 100+% to see if they can go up 300%. If you catch it right, obviously you can make a lot of quick cash with it. But that's like what I'm trading right now because for me this would never be more than I mean I don't want to say it would never be more than a day trade. Maybe if they close it at $7 and I left 100% or something like that, I might keep it. But for the most part, I'm never going to do anything more than a day trade on this or even some of those other names right now while we're waiting for the market to kind of set up better. So that's the biggest thing. I think that the market itself needs to set up better at this point. I would still lean to the side if I have to pick a side of the bulls. And I still am 100% net long, but like I said earlier, while I'm 100% net long, I'm like I don't know, 70, 75% out of the uh, you know, long positioning that I had on in the very beginning of November. And, cash as a position, um, it's gonna be interesting because this really tests my patience to some degree, and I can be decently patient on small time frames. It's difficult for me to be patient sometimes on the larger time frames. I think it all is. It's one thing to, sit on your hands for 15 minutes while you're watching something extend up and waiting for a signal to be able to actually short. It's something else if you're trying to sit on your hands for a couple of weeks, see how the market sets up after a huge run. So we'll see how well I'm able to do with that. But again, for the moment, on the bigger picture, I don't see anything that is really worth doing. I still like the China trade a little bit, and that's obviously improved. I love that this BABA was able to get above the high from a couple of days ago. I think that's actually started to confirm a bit of a reversal on the daily chart. BABA, I've just been looking for a move back to the $78 to $80 range, but some of these look really productive. Baidu starting to look productive again, still holding above that 112. It needs to clear above 115. JD, so they haven't run these names. Obviously, China's been having issues that it's been working through, but that trade is maybe there potentially. But otherwise, I'm mainly hands off, and a lot of the stuff I'm doing has been smaller right now, and I'm just fine with that. Um, like I always say, I think that one of the most important parts of successful trading is knowing when to be aggressive because the market is setting up well and providing you great opportunities, and you need to be aggressive to take advantage of them, and knowing when to be a little bit more passive because the opportunity is not there. And while I'm a big believer in consistency with your trading, not every day is created equal. And you, I think that consistency enables you to have rules that let you be more aggressive in certain circumstances and less aggressive in others. And for me right now, we're just in an environment after just this massive move. Um, where, finally after kind of last week where we got even further continuation, I'm hitting a point here where I'm really looking to be a little bit less aggressive and seeing how the setup comes in. Still was able to post decent P&L for myself though. That's mainly because those two Chinese names performed so well. So that's pretty much all I got. And again, with that said, there were still some great day trades out there, like some of those names that I just mentioned. ENPH, Nova, Sunrun. Elliot had great calls with TTD this morning in particular. PayPal, not so bad either. So there were still good trades out there. That's all I got. I'm happy to answer any questions that you guys have. Oh, and I wanted to mention actually while I was rambling about going to Idaho. So next week, just that week in between Christmas and New Year's, we'll probably cancel afternoon meetings that week, unless Josh wants to do them. We'll probably cancel afternoon meetings that week just for the holiday week. I think Pat's out on Tuesday and Wednesday in particular. I'll be working probably every day, but I'll also be traveling a little bit. So, we'll just do things a little bit lighter next week as far as meetings and everything, and then we'll start picking things up in the new year. Happy to answer any questions that you guys have. First, I'm seeing from Zahor, trying to understand the VXX versus index behavior during the power hour. I see they were directly correlated. Why is that correlation we see at the market close? Sure. So I was getting a few questions about this. Um, So the market was moving higher and the VIX was moving higher, right? So whether you're looking at VXX as your product for the VIX, you're looking at UVIXY, here's your product for the VIX, or you're looking, and obviously you can see the SPYs and the Qs were going up. We're very used to seeing like an inverse correlation, I think, and I think that some traders mistakenly believe that it has to be that way, meaning that it has to be that if the market's moving higher, that the VIX is going down. It does not have to be that way. um, the VIX is meant to measure volatility, really, right? The volatility index. And what I was saying to someone else that asked me the question just a little bit earlier is most of the time you do see an inverse correlation, right? Most of the time volatility increases because the market's going down, but at certain times, if the rate of increase in the market is expanding, in other words, if you're seeing a market like go parabolic to the upside, which we're starting to see, volatility can increase as the market goes up as well. So that is just the beginning, I think, of what we're starting to see. So you can definitely get the VIX to move higher as the market is moving higher, and that can be sustained for periods of time. It typically can't be sustained forever. It typically becomes at least the beginning of a warning signal. The last real time I remember this very closely, and I'll see if I can find it, was September. I always forget what year. Was it 2020? Yeah, September 2020. The end of August and the beginning into the beginning of September. Um, Zoom. Yeah, into this move right here. If I remember correctly, the last like 4 or 5 trading sessions or so, the market and the VIX were moving up together. Yeah, you can see this here. So the UVIXY bottomed on August 26th, and the market went up on August 26th. So they went up together on the 26th, they went up together on the 27th, and they went up together every day through the second, basically, when the market finally topped out. So that's what, one, two, three, four, five, that's 6 trading sessions in a row where the VIX was moving up and the S&P was moving up. So again, you can get that for sustained periods of time. You could get that even potentially for more than 6 days, but at a certain point, it does, I think, become kind of a major warning signal. And it certainly was back in this period here in August, September. I remember this was one of the times where as a team we kind of perfectly called the market top there, and one of the bigger factors that we were looking at was the VIX moving up with the SPYs. So while the vast majority of the time you don't see that, market up means VIX down. You can see it happen in certain periods of time, and the move higher in the VIX, it like we're certainly off lows. You know, the low in UVixie is $8.45, I think. I got stopped out at $8.54. Um, and now we're up to 920 or so. That's a decent move, but it's kind of been a dribble higher. It hasn't been like a real move higher that you will see in certain periods of time when the VIX can actually explode like it did. I don't know, back here in March, I guess, just as an example. Like this can move large percentages of time, large percentages very, very quickly. But this could be a warning though that this picks up at a certain point, which is why I think it was Bill posted that there was a really large VIX put sell that went off, um, which would be obviously a bullish bet on the VIX, and I was like, ooh, and I said it kind of half joking in the BTF. I was like, "Oh, should I chase you Vixie on that?" And I didn't. But this dribble up could become an explosion up very quickly. To go parabolic if they start ripping junk names even further than they already have. Um, And then if that actually then becomes a topping signal, which at a certain point it probably is, and then the market breaks down, then the VIX probably even continues up even further after that. So there could be a really good trade there. It's just a difficult trade because this UVIXI is such a piece of crap um, ETF. So is VXX. They both really are, just because the way that they decay. And I guess Bill was also providing some information earlier that that decay should, really begin to increase, I guess, in earnest, maybe tomorrow, I think he said, or pretty soon, just with the way that the product itself is structured, and also with Uvixi because it's leveraged, and anything that's leveraged is going to have even increased decay kind of beyond that. So it really makes, like, in some ways, the Uvixi is the worst product of all time. But when it goes, it goes. So it's like this is never something that you would want to hold in your 401k, or your IRA. You don't want to have a UVixi holding in there that you're planning on keeping until retirement. You're gonna lose all your money. But if you can time it well, this can be a thing that can deliver 500% like real fast at the right time. Um, and that's, I am looking for that trade to come together. It's just tough. I said it when I got stopped out of the position a few days ago. It's like I wanted to actually keep a little bit of a looser rope on that. I wanted to see if this thing could even base a little bit and then go. There were definitely some signals I felt that UVixi could start moving higher. It's just that time is not a luxury that you can have with this thing. I can't just sit there and let it base and see if my idea is right. It's just going to bleed out against me because of the decay. So it just makes it really, you have to time it so well, which therefore I think requires keeping a short leash on it on the downside, which is the whole reason why I got stopped out. Otherwise, I would still be in it. And I had size too. I also don't think this thing's worth taking unless you can take real size. I think that you gotta have tight stops if you trade it, and you have to have real size when you trade it. Otherwise, it's not worth it. But yeah, they can certainly move up together. Next question from Dave. I'm having a hard time justifying trying to participate in the market right now from a risk reward perspective. My intraday setups have not been working as well lately, and my longer term plays where I short puts don't have that much premium in them due to the low VIX. The only trade I have on right now is a long oil position in CL, which I took yesterday and I got risk cover today. Okay, that's good. The way that I'm justifying it is due to oil being uncorrelated to the market, is the type of trade where you try and find something that doesn't have anything to do either way with this rally, and if not, uh, what are best practices for times like this when you don't really have anything out there right now? Sure. So, um, I think that your question is exactly what I was just talking about in the whole kind of beginning part of the meeting there. Cash as a position, I'm actually feeling the exact same way as you right now. I'm also having a hard time justifying overly positioning in this market from a risk reward perspective. on either side. So, that's kind of why I'm saying here that knowing when to be aggressive and knowing when to be passive with your trading is key. And that for me right now, this is a time to be a little bit more passive. And like I was also saying, even with the longs that I have on right now, I guess similar but different to yourself, they're also a little bit more uncorrelated. Like, the JD Baba trade is definitely going to be a little bit different than being long spies or Qs. Um, I'm long Chevron, which gives me some oil exposure, which is interesting right now. And I see your trade there. I am still a believer that the actual individual equities will outperform the commodity itself. So that's why I've got that. I've got this Tilray trade on. That's like, it's a $2 stock. It's totally not related to kind of everything else, right? And as far as everything else goes, well, after catching 100% moves and things, to be honest, it's okay to take a half step back and say, hey, let me just be patient. Let me have things set up. You just got to be really careful because I have a tendency to do this also. Um, I like to be busy. I like to be busy with my trading. It can be easy for me at periods of time to just say, oh, screw it. I'm just gonna do this or do that or trade this or trade that and just kind of trade it for the sake of trading when the setups aren't really there. I think you gotta avoid doing that. The setups will come back into play. We just have to be patient to let them come together. And that's kind of the game plan that I'm following for now. Dennis here saying, also basically repeating what I'm saying, but saying, in my opinion, you cannot blame any trader for being on the sidelines at the moment. If you can't see it in this environment, it might be a good opportunity to work on your playbook, trading supportive habits, etc. Yeah, I agree with Dennis entirely. Um, you know, what I tell people this on smaller time frames, probably than what Dennis just said all the time in regards to traders at their max loss for the day. Um, I think that one of the worst things that you can do as a trader, most of the time, every once in a while, maybe you need to take a step back and get a breath of fresh air. But I don't like the idea of hitting your max loss on the day because you had a bad trading day and then turning off your computer and going and doing other things. Again, once in a while that might be okay to get out there and get a breath of fresh air and just get away from the computer. But if you had a bad trading session and your risk rules are dictating that you should no longer be trading, that doesn't mean that there isn't other things that you can do to support your trades or to support your trading, I should say, going forward. It's like if you had a bad trading session, you hit your maximum loss and you're shutting down, is that really productive? Should you really allow yourself to shut down for the day before you've actually reviewed why things went wrong that day? Did you do the right things and probability was against you, or did you do all the wrong things? If you did the wrong things, what did you do wrong? What adjustments are you going to make? There's always work that we can do from a research perspective, from a learning perspective, from a review perspective. So take the time to do that. I know honestly during the day to day, at one point when I wasn't trading a whole bunch, I was doing that myself. It was the middle of the day and I was just kind of focused on learning some trading concepts that I've been kind of working on learning. So there's always things that you can do that are going to be productive for your trading that aren't necessarily the actual act of trading when the market's in a tougher spot. From Tom K, what do you mean when you say a stock is trading a huge amount of volume, but it is very thin? Um, sure. So I don't I wish I had some direct examples of where you're referencing me saying that, but I can certainly speak in general terms. Um, some stock so what does thick or thin mean, right? Those are measures of liquidity, and to some degree they're a little bit subjective. One of the first ways in which I just kind of look at a stock is just how wide the spread is. So, and when you're thinking about a huge amount of volume, that's a relative concept. Um, like, I don't know. I wish I had a good example that I could come up with right now, which is why I say that I wish I had kind of in the moment of when I last said that. But a not so great example. Um, Thanks. I'll look at Carvana also, but maybe this like C-Gen from today. I think this is like a low floater most of the time. On a normal day, it does 73. Actually, this isn't a great example because it didn't trade thin at all today. It traded super thick. But normally it does 100,000 shares a day. Today it did 113 million. It was trading more than what it does in an average day, like every 2 minutes. Um, so that stock was trading a ton of volume. So now it's also possible that if you took this CGen and it was actually a $200 stock instead of a $2 stock, that it could be trading significantly more volume than it normally does, but it could also be trading very thin. And you'll see that a lot of times with the names that go super crazy. Um, like I typed up, and again, I was a little under the weather yesterday, so I only like looked at it one time super briefly yesterday. But that one started with the Z from yesterday, Z whatever, which no one should trade, by the way. If someone could remind me the symbol, it's a four-letter symbol that went nuts and got halted yesterday, and there was some weird Nasdaq halt news on it. If anyone can remind me, thanks. ZJYL. Yeah, I mean, this thing, I typed this up at one point during the day today, and it had like a $3 spread. So it's doing a lot more volume compared to what it does typically, which is like, I don't know, 70,000 shares, but it was stupid thin, you know, crazy widespread on it. No liquidity to be able to trade this, no liquidity to be able to get in or out of it, and also super dangerous to be involved in it. So no one should be trading anything like this on either side of the market, even if it belongs back to $10. Um, you could short this thing at 180. It ends up going to 10, but it goes to 1,000 first, and you're more than blown up on the position. So that kind of be, I guess, an example of a stock that's trading a ton of volume, but it's also super thin. Um, Carvana as a recent example. Yeah, I mean the volume's picked up in this a little bit. I don't think that it stays thinner, but it doesn't trade necessarily super thin. It thins out at times, which you'll also see in certain stocks. What do I mean by that? Like sometimes you'll see that stocks thin out as they're moving very quickly. So if it's not moving very quickly, it's having a normal day or it's in a trading range or whatever. It's it looks like there's plenty of liquidity in your depth of market there in your book. But then when it starts moving fast, it seems like the liquidity all kind of disappears. Zahor mentioning EVN. Yeah, I didn't look at this one at all during the day today either, so I don't know, how thick or thin it looked. I don't know what the spread looked like, but this one also obviously woke up with significantly more volume in the last few trading sessions than it normally does. So I guess the point is, Tom, to directly answer your question, even if I don't have a perfect real-time example in front of me, is that you can have stocks all of a sudden start trading significantly large amounts of volume. And when I say that, I usually mean that comparatively, like compared to how it typically trades, but also be very thin because of the way it's moving or the float or the price or something like that. So I hope that helps. And it's important to know when a stock's not tradable, like that ZJYL, and just recognizing that you can't be involved in it on either side of the market. You literally risk your career. Cool. Popping over to the YouTube. From Gabriel, I traded Oxy around 59.29. Let's take a look at Oxy. Strong day from Oxy. We know Grandpa Warren came in and bought some stock at one point last week. I would assume that was right before this gap up. Let me read the rest of your question. So you traded some at around 59.29 as it sold off and it got bought back up at the open. Your stop loss was the day low. Okay, that day low tail held. Um, from the fundamental side, Buffett keeps buying it and think oil is higher from here. Okay, there's definitely reason to believe that, and it's always nice when you know that you got Warren Buffett on the bid. as good, if not better, than a buyback, right? U.S. has to refill its strategic petroleum reserves at these prices. Also, from the technical side, I like the huge unfilled gap that, if not filled, has given continuation recently. Yeah, me too. I'm a little bit uncertain on the price of oil, though. I've read some constructive analyst stuff on OPEC Plus, and the Saudis are probably going to continue to keep supply a little bit tight, which, I don't know, that information can kind of change on a dime a lot, but it seemed productive to me. I like the stocks better than the commodity. I keep saying that, but that's just because a lot of these things are trading at more value prices. A lot of them have really strong buybacks and have strong ways in which they're returning cash to holders. I like overall, even if it's been hurting the stocks like ExxonMobil and Chevron a little bit on the smaller time frame. I like the M&A that's also going on in the space, assuming that it kind of goes through. Like, it's just going to make these companies even stronger in the big picture. So, Chevron's been the one that I've been focused on. Oxy's good too. The problem with Chevron with that Hess merger is that it caused them to suspend its buyback, but I think that buyback is going to be reinitiated in early in Q1 24, I think. So then that becomes supportive again, and Chevron I think has the biggest buyback in the XLE space broadly, and it was I mean, regardless of XLE or not, I think it was like a $10 billion number. It was a massive buyback. So yeah, I'm kind of with you. The price of oil, let's say, is probably a little bit more of a question mark, but it seems like it's becoming a bit more supportive, and it's also probably a little bit of a China play to some degree, also, that the China recession doesn't necessarily become the end of the world, and at some point they get their demand back online, also, which I think is going to happen. Um, so yeah, good trade there. I like how you're going from big picture down to small picture. The daily chart's a little bit sloppy. I don't love this daily chart, especially after the weakness yesterday. But sure, could be a B plus trade. What do I think of the FedEx earnings report that came out? I actually didn't look at the numbers, so let me scroll up. What's FedEx doing? FedEx is down 9%. Second quarter revenue is 22.2 billion versus estimates of 22.41 billion, so it's a small miss. Adjusted operating income is also a miss. Their guidance is $17 to 18.50 with estimates of 18 dollars and 22 cents. It seems like guidance is a little bit on the light side. Um, They expect to buy back an additional $1 billion of stock during fiscal 24. We always like that. You see low single digit revenue decline for 24. Yeah, their EPS is a miss for second quarter. Um, yeah, these numbers don't look good. These numbers don't look good. I mean, it's pretty much a miss across the board. They did add to their buyback, which is always nice. Um, yeah, I don't know. The market seems like it's appropriately taking it down. And the real question that I'm trying to ask myself as I'm looking at this FedEx is it broadly concerning? We used to always look at FedEx and UPS as like, well, if these companies aren't doing well, it means that the economy is starting to deteriorate because people aren't putting things in the mail anymore. It's gotten a little bit more difficult to read because it's like, is the economy doing worse, or is it just that Amazon is taking their lunch and doing all the shipping themselves, which we know is certainly happening. So it's a little bit harder to look at FedEx and UPS than I think it used to be, just for kind of broader implications about the overall economy. But on the surface of things, these numbers don't look great. I think the stock trading down here 9% after hours seems appropriate for it. So hope that helps. Bright. From Michael B. Regarding the liquidity concept, I've noticed that when price starts to accelerate, liquidity disappears in the depth of the market. Yes, that's definitely true. I read that this is due to algos turning off. Yeah, that there's also some truth to that. Any insights into that? Curious to your thoughts. Yeah, so the problem with these algorithms, and this could lead into a whole big tangent or spark a whole bit much bigger, broader conversation. Um, The HFT algorithms, there's obviously been a ton of debate over time on whether or not they're good or bad for the market. Uh, because on the one hand, those liquidity providing algorithms, the argument that they say we're good for the market because, even if we are chiseling pennies away from retail money, we're creating so much more liquidity that used to not be there, that that retail is getting better pricing than they used to be able to get, 20 years ago, before we existed. And while there is truth to that argument, the problem with that argument is that the liquidity providing algorithms in the market that are doing that, they're not like market makers that have mandates where they have to be on the other side of trades. So what you'll see is that the liquidity providing algorithms only actually provide liquidity to them, only actually provide liquidity to the market when it is advantageous for them to provide liquidity to the market. So you absolutely see, in times of uncertainty, liquidity dry up. So, one example of that is, if you look at depth of market, like right before any really major economic number or right before any major Fed event, you'll always see the depth of market start drying up like a minute before uh, that news event actually hits. And that's because, why would a liquidity providing algorithm want to be the actual, like 3 cents down from the inside bid in the SPY, right as a number is about to come out that can rip the market higher or lower? They're only going to get filled if the market's like actually ripping lower, and they're probably going to be instantly out of the money. And that's also true if stocks or the market itself is having a really big fast move. Why are they just going to be providing liquidity on any side of the market and taking on that additional risk? They don't want to. They want to provide liquidity when it's advantageous for them. They want to be providing liquidity when it's reasonable that they can chip away at making those pennies over and over and over and over and over again on, millions and millions and billions of shares. They're not in the business of taking chances of getting stuck in something. Because all of a sudden, if you're in the business of trying to make a penny on spreads, and then all of a sudden you lose $1, well, you got to make a lot of pennies to make that dollar back. So yeah, it's 100% true that these liquidity providing algorithms are always there to provide liquidity when you don't need it, and then when you need it most, you'll find that that liquidity disappears really really fast. Which, I mean, I have really big concerns about liquidity in the options market at a certain point. Like, especially with a lot of the zero DTE and one DTE stuff, because there's just a lot of people out there that are selling zero DTE, one DTE calls, and if something happens where there's a squeeze there, and all of a sudden that liquidity vanishes, that could get real bad real fast and could have major effects on the entire market for relatively, I mean, there's only so long of an effect I think that a zero DTE or a one DTE option could have on the market, because by nature they're gone the next day, unless it's such a big move that it has, wider, broader implications on, like, the VIX or something, and it starts with like a zero DTE, no liquidity SPX squeeze that causes the VIX to rally, which then causes some other products to begin to blow up, that leads to a much bigger move. So that could happen as well. But I'm going on a tangent away from your question. It's just something that's been in the back of my head a lot recently, and I've been trying to keep an eye on that. Thanks, Michael. Thanks, Bright. Um, Thanks, Dave. All right, gang. I'm gonna wrap it up there. I hope everybody had a great day today. I'll see you all tomorrow morning. Have a great night. And if you're on YouTube, give me the thumbs up.